WestJet, as we know, it is a Canadian corporate success story. The company was founded back in 1996 as a low-cost airline, and one way the company tried to separate itself was through its culture, a culture that stressed the employees were actually owners. The airline grew into Canada's second largest carrier, while still facing its fair share of challenges, which of course included some labor disputes, volatile fuel prices, and also economic weakness in its home market. For more on the deal and the WestJet experience, we're now joined by the company's president and CEO, Ed Sims. Ed, thanks so much for being with us. Appreciate your time today.
That's a pleasure, Catherine. It's been a busy one.
Yeah, I'm sure it has. Speaking of which, why don't we start with how busy it's been? How did this deal actually come together? Why was it that this special committee all agreed unanimously that this was the best option for Onex to come in and buy this company? Why was that the case?
Well, we've known Onex for a long time. Onex have pretty deep roots themselves in the aviation industry, if not in the primary source through an airline, then certainly in vertically integrated sources like the lessor market, like the maintenance and repair market, like the catering market. So we spoke to them initially 2 to 3 years ago. They came back in early March, really, I think, looking at the fact that we brought a management team together very recently, a management team with about 150 years of aviation experience to execute a number of strategic initiatives, from low-cost carriers to delivering wide-body Dreamliner jets on the Atlantic. And they felt, like we felt, that the value inherent in WestJet was not being recognized in the public markets.
Well, perhaps that's also because this is a newer transformation in terms of all the expansion that you and your team have been doing over the past couple of years. You went to Onex, as you say, 2 to 3 years ago. What do you think it has been that they've seen that made it so much more attractive today versus 2 to 3 years ago?
Yeah, well, let me just clarify. Onex really came to us, and Onex reapproached us then in early March. I think they saw that all of these initiatives that I described earlier are all interdependent, and they're all driving towards a position that we would call a segmented brand position, catering for newer travelers, millennials at the lower cost end, catering for road warriors at the higher end of our business class in the 787. They saw that a lot of those initiatives, whether it was our partnership with Delta, our newly forming partnership with Air France and KLM, were all linked towards this path of actually driving higher margins, greater yield, while remaining intensely price competitive.
And what does it do to the company's strategy, that build out, that growth strategy, to have Onex as a partner and a private partner versus being in the publicly traded markets? What are you going to be able to do as a private company, essentially, that you perhaps couldn't do independently?
It's reaffirmation of the strategy, Catherine. It's the need, or we look out on our assets, our 787 aircraft, our 737. We buy those aircraft on a 20 to 25 year basis. When you're constantly being asked every 3 months to reevaluate whether every individual strand of that strategy is profitable in its own right, it can encourage short-term thinking and a transactional approach to the way that we build our fares and the way that we look after our 25 million guests every single year. What we want to do is look out across the useful life of those assets, look out across a 5-year horizon and say, are we building a series of interdependent strategies that build value across each other without reevaluating them on a pure quarterly basis? So it doesn't imply any kind of pivot or any kind of change of direction. It's a reaffirmation that the path we're on is actually a path towards long-term profitability, irrespective of the sort of headwinds that you referred to that we saw regularly during 2018.
Which is so interesting because you did suspend your 2019 financial forecast not long ago. You've got 10% of your fleet has been grounded, the 737 MAXs, and yet it sounds as though Onex and your team could sit back and put pen to paper and come up with an appropriate valuation. What were those conversations like in terms of, you have to, at the end of the day, assess what that 737 impact is going to be?
Yeah, we started the conversations before the grounding of the MAX, not long before, but Onex, like us, see two things. One, they see that the grounding of the MAX is a short-term aberration. We fundamentally believe in the forward order book of that aircraft, and we believe in the viability of that aircraft. Onex also see, like WestJet see, that we've got a really clear line of sight now to the reintroduction of those aircraft. That's based on a rigorous program of software enhancements coming from the aircraft manufacturer Boeing. It's based on a change to procedures that we are now looking, once those software enhancements are rolled out, to roll out across our pilots. And then it's based on restoring customer confidence in those aircraft. They believe, as we believe, that this is a period of intense focus on safety and on customer reassurance, but essentially the long-term viability of our relationship with Boeing and the long-term future of those aircraft is very bright.
What's your sense then of the timing of getting those planes back in the air?
We think it's going to be in the second half of the financial year, and we're looking for the third quarter rather than the fourth quarter for the reintroduction into service.
Ed, what surprised you the most about the Onex team in dealing with them?
It shouldn't surprise us at all, but their level of financial acuity, the questions they've asked about our balance sheet, the questions they've asked about our return on invested capital, they ask the questions that objectives outsiders ask us on a quarterly basis, but they've been in the room with us every day, really challenging what are at times kind of received wisdoms in the airline industry, and they forced us to re-look at our business as an outsider would and make sure that that business and our belief in our strategy is as cohesive as we genuinely believe.
What would be an example of that, Ed? I'm curious in terms of what Onex, a private equity company looking at the airline industry, which has so many different views and opinions on, saw something that perhaps people in the industry didn't. What would that be?
Yeah, one example of that, Catherine, would be the value inherent in an ultra low cost carrier. I think we've always seen that as effectively a defensive proposition, ensuring that the WestJet group retain its market advantage in the ultra low cost end of the marketplace. Onex have challenged us and said, how can you grow ancillary revenue? How can you grow a low cost distribution network that sells and brands your fares not just out of Canada, but actually out of the US back into Canada? And they forced us to look at traffic flows at both ends of the routes at that low cost end. So they saw opportunities coming in as potential investors that we've now been able to realize and capitalize in the time that we've been talking to them, and actually help broaden both our distribution strategy and improve margins as a consequence.
Ed, what does this mean for the traveler? What are you communicating to the traveler about this new partnership?
The key message really is one of continuity. Catherine, we've always retained a double-digit cost advantage over our largest competitor, and we've always given that back to our travelers and our guests as a double-digit fare advantage. So what we really see coming out of this relationship is continuity, both with the strategy around segmenting our guests and retaining our DNA of low fares, retaining that sense of a challenger brand, and of course our award-winning culture that WestJetters have delivered over the course of the last 23 years, that just by example, for the last 3 years has seen TripAdvisor's 500 million subscribers vote us Canada's best airline for 3 years in a row.
And Ed, what are some of the comments you're hearing from staff today? I mean, if you take a look at other private equity firms buying publicly traded Canadian companies, there's a few that come to mind. There always are concerns about job cuts or streamlining too much. What are those conversations like you're having with staff today?
Well, we really put that to the test about 2 hours ago when myself and Tawfiq Poppetier, Managing Director of Onex, sat in front of 1,200 WestJetters who we'd asked to gather together to understand more about what this deal means for them. We focused on two elements. One, that we gave our reaffirmation that there will be no job losses as a consequence of this transaction. And the second is that we are working closely with Onex to preserve the existing entitlements and the terms and conditions of all WestJetters. And secondly, where some of those schemes were based on public ownership, we're now ensuring that we have viable schemes to replace that ownership. One third element that I would point to was early this morning, I spoke with all of the unions who represent 43% of WestJetters and gave them that same reassurance and reaffirmation. So I think those are great examples where this collaboration is being delivered very transparently and with a great deal of direct communication.
Ed, just last question. Will you be staying on with the airline?
I intend to stay here as long as I possibly can. I mean, I think I've spent a good part of the last 18 months bringing this highly experienced management team together. I'm loving doing what I'm doing. I'm extremely excited about what the partnership will bring, and I'm going to stay here and deliver this to the best of its fruition.
Understood. Ed, great to be able to catch up with you today. Thank you very much.